If you're using Stripe Tax, it may not be configured properly for your business. A few small missteps in your Stripe Tax configuration can throw everything out of alignment. Behind the scenes, we consistently see businesses with settings that lead to over-collecting, under-collecting, or issues that only show up later when it's time to file. But this can all be fixed. We work with Stripe users every day, and there are 3 common issues that come up over and over again. First, product tax codes aren't set correctly. This is one of the most overlooked parts of the setup, but it directly impacts how tax is calculated. Stripe Tax uses product tax codes to determine how your products are treated across different states. If those codes are missing or too generic, you can end up with tax being applied when it shouldn't be or not being applied where it should be. And the nuance here matters. SaaS, or software as a service, is taxed differently depending on the state. Digital products vary widely, and even physical goods can have category-specific rules. If everything is left as a default classification, there's a strong chance your calculations just aren't accurate. And depending on what you sell, this may require an expert opinion to map your products correctly, especially if you're dealing with gray areas. Because once those codes are off, everything Stripe calculates after that is also off. Second, not understanding Stripe Tax pricing. There are 2 main ways to use Stripe Tax. First is the Tax Complete subscription model. This is the more comprehensive option. It starts around $90 per month and scales as your business grows. This option includes registrations, transactions, API calls, and filings. As you need more of those, the cost increases. This is designed for businesses that want more of an all-in-one solution, not just tax calculations. Second is Tax Basic, which is pay as you go. This is the lighter option. You pay per transaction where tax is calculated, typically around 0.5% per transaction. There's no monthly fee, and it doesn't include things like registrations or filing. This tends to make more sense if you only need calculations, are handling compliance elsewhere, or want a simpler setup. But here is where things break down. Issues start to show up when businesses don't fully understand which model they're using or try to mix the 2. That leads to inconsistent tax collection, partial setups across products or regions, and confusion about what Stripe is actually handling. Some transactions are handled correctly, others aren't. And that inconsistency is what creates problems later, especially when it's time to reconcile or file. Third, reporting can be difficult to interpret once everything is live. The next challenge is understanding what Stripe is actually showing you. Stripe Tax breaks things down into where you're collecting, where you're not collecting, and areas that may need attention. That needs attention category is where a lot of confusion comes in because it can feel like Stripe is telling you to act everywhere. But for US sales tax, the rule is still the same. You only need to register and collect if you've actually crossed nexus thresholds, unless you already have physical nexus. So those flags are prompts to evaluate, not instructions to act. Stripe also offers Stripe Sigma for more advanced reporting. That can be helpful if you need deeper insights, but it does come at an additional cost and requires a bit more setup. But there is one other area that is often overlooked in your Stripe setup, and for more on that, check out this video. And remember, when in doubt, always consult with a sales tax professional.